This is Asia Trade. I'm Shery.
And I'm Haidi Stroud-Watts. The top stories this hour. A left-wing alliance set to win most seats in the French Parliament and a surprise reversal for Marine Le Pen's far-right national rally.
Asian markets set for a cautious open after the French result and a soft U.S. jobs report that adds to the case for Fed rate cuts as soon as September.
And Samsung workers set to walk off assembly lines on Monday, kicking off the biggest organised labour action in the company's history.
So much news to digest this week, but I think the most important thing is that Haidi is in Tokyo. Welcome.
Breaking news.
Breaking news.
It's so lovely to be here with you. Of course, you know, the yen is very favourable for anyone who's travelling to Japan. It is very hot out there, but of course...
I was going to say, are you shopping already?
I haven't done much shopping, but certainly there's a lot going on in the news that's proving to be very distracting as well.
It's really interesting because we're not seeing those safe haven moves when it comes to the strength of the Japanese yen as of yet, right? Right now, this week, tons of political risk really to digest, of course, including the French election results. I mean, what an upset, because the expectation, of course, was for Marine Le Pen's far-right national rally to take most of the seats, and that didn't happen. Now they're coming in third, and we're expecting Macron's centrist alliance to come in second. And, of course, it's all really a question of deterioration of its public finances. Of course, we know that France already has a very bloated balance sheet.
Yeah, and this idea of fiscal versus monetary at what is a crucial point in the part of the cycle that we're in kind of is just a repeat theme that we see, right? And so much election uncertainty when it comes to the US as we head into November. We're getting more and more calls from these congressional Democratic leaders really talking about this idea that, you know, perhaps Biden needs to step aside. But, Shery, we keep hearing from President Biden. In fact, he gave this interview to ABC News, again, this note of defiance, saying he's not going anywhere. And, in fact, he thinks that he's the only person who can certainly hold together these key international institutions. Take a listen.
I'm the guy that put NATO together, the future. No one thought I could expand it. I'm the guy that shut Putin down. No one thought could happen. Who's going to be able to hold NATO together like me? If the Lord Almighty came down and said, Joe, get out of the race, I'll get out of the race. The Lord Almighty's not coming down.
It's really interesting to see the market resilience despite all the political risk. I mean, we are talking about the S&P 500. What is it this year already? 34th record high in 2024. Take a look at how U.S. futures are trading at the moment because, of course, we had stocks rallying. We had Treasury yields falling, really to do with those results that we got from the jobs data. U.S. hiring moderating, jobless rate hitting the highest since 2021. So what will that mean for the Federal Reserve, of course, is a key question. As we see Brent continuing to gain ground, that risk on sentiment sent oil for another week of gains, the fourth already, Heidi.
And Shery, it was interesting you were talking about the lack of, I guess, haven demand or haven action that we see from the likes of the Japanese yen, right? But we are seeing that reaction across potentially some weakness for broader risk assets as we get into this trading week as a result of the big upset in France and a lot of the uncertainty that's still playing out with the US election, presidential nominations as well, right? This is what we're seeing, a bit of weakness across the futures picture when it comes to Sydney. Certainly some of that being expressed through the Aussie dollar, which, you know, it might sound a little bit counterintuitive, but always acts for as a bit of a broader proxy gauge, right? And that's telling us that there risk a little bit of sort of risk aversion in these markets. The Nikkei futures picture off by about 0.3%. Also watching some of these China assets there as well, as we see still a lot of uncertainty over this recovery, a little bit of concern. You know, certainly we've heard from some of these academics about the improvement in the bilateral relationship, and that's CSI 300 worst weekly losing run since 2012. So still a lot of downside pressure when it comes to Chinese risk assets, Shery.
Really downside pressure when it comes to the euro as well, as we continue to see that fall with that upset when it comes to the French elections. A left-wing coalition on course to win the most seats in France's legislative election, a surprise blow to far-right leader Marine Le Pen. A leader of one of the parties in the new Popular Front alliance says the nation's wishes must be respected.
A majority has made a different choice for the country. From now on, the will of the people must be strictly respected. From now on, no subterfuge, arrangement, or combination will be acceptable. The lessons of the vote are irrefutable. The defeat of the President of the Republic and his coalition is clearly confirmed.
For more, Bloomberg's Oliver Crook joins us now from Paris. And Oliver, I mean, we saw a lot of strategizing from the left come to this final round, but how unexpected were these results?
I mean, I think it's fair to say that this was really a sort of bombshell when these sort of lines started crossing our newswire this morning. This evening, I should say. This was really totally unexpected. As you were outlining, the Rassemblement National, the far right, was really expected very widely, according to all the pollings for the last few weeks, to really sweep. This was going to be the election in which they came basically the closest they've ever come in their many-decade history to power. That is not the story that we're telling today. We're telling the story of a group of the left coalition that has come together, that has managed to muster the greatest number of votes within the Assemblée Nationale for this round. And in fact, even Macron's party, the very unpopular Macron, famously unpopular in recent weeks, managed to also get more than the Rassemblement National and Marine Le Pen's party. This was really completely unexpected. And when you think about kind of what the composition of this parliament is going forward, the issue that you have is, despite this upset, there is no absolute majority within this government. So basically, though it did work to have the sort of alignment within these parties in order to basically block the far right, which is a long-standing French tradition, one that we didn't know whether or not it was going to bear out this time around, it does leave this country within something of a limbo, because this is not a parliament where it is very easy to see where the power is going to flow.
And as you say, Oliver, this is not a country that is used to dealing with coalition governments and these sorts of negotiations, right? So how does government get formed? Who's going to be Prime Minister?
Well, that is exactly the question. I mean, Gabriel Attal is the prime minister right now. He spoke tonight. He said that he will tender his resignation to the president tomorrow. At that point, what is the expectation in the procedure is that Macron will then go traditionally to the party with the greatest number of seats, in this case the left, in order to give them the opportunity to begin to form a government. But this is where things get interesting, because this left coalition is composed of parties that are very disparate and who have very actually different views politically. It's not at all obvious where the sort of weighting is going to be on how far left this is going to be. I mean, we heard from Jean-Luc Mélenchon, who is actually the leader of the part of the coalition that had the most number of votes, but is also the most contentious. Have a listen to what he had to say for a sort of flavor of the negotiations that we're going to have going forward.
We said it already last, and we reiterate this to the President of the Republic. We refuse to enter into negotiations with his party to make wheelings and dealings, especially having fought relentlessly for 7 years against his policies of social abuse and ecological inaction. The votes of the French people have just confirmed this.
And there you have Jean-Luc Mélenchon, who is not necessarily the designated leader of this far-left group. He's certainly one of the most outspoken, but really he was the first one to speak after the exit polls dropped, really wanting to put himself forward to say, you know, I have this sort of mandate and we should be able to form a government. But it's not really up to him. And the question is, we don't actually have the full final arithmetic here. I mean, there is also a possible world where this left coalition decides to say sideline him and actually have a more centrist left government that could combine with Emmanuel Macron, which is probably why we're not going to hear from Macron this evening, and he's now waiting until tomorrow for a bit of the dust to settle. Anything, though, could really happen. What is somewhat clear is there is likely some gridlock looking forward here in the French Parliament.
I mean, investors are not going to like that, right? I mean, last week we saw a little bit more calm when it came to the French markets, but are we going to see that French bond spread widen again?
Well, listen, that's what we're going to be watching for in the next couple of hours when the markets open up. We already had the euro open up a bit lower, but not really anything terribly dramatic. I mean, listen, this is not the worst case scenario for the market, certainly far from it. The question is, I think for the market principally, is how weighted will this government be towards Jean-Luc Mélenchon? I mean, we're talking about policies where he wants to bring back down the retirement age, he wants to up the minimum wages, and this is the sort of program that the left has put out. This is a very costly program, and as you were alluding to at the very beginning here, there is a real spending problem within France. There is a deficit problem. And these sort of projections that some of the economic institutions have made of what this left program would look like, they're talking about an extra $200 billion a year in spending. That is not funded. You know, markets don't particularly love unfunded spending, and markets at a certain point actually do become protagonists within the political story, as we learned with Liz Truss. We don't expect anything sort of that dramatic, but you certainly will have the market, its voice heard this morning when they open up.
Bloomberg's Oliver Cook there with the latest on France. And on the theme of divisions within politics and turmoil, we're hearing more congressional Democrats are telling their leaders they want Joe Biden to step aside as the party's White House nominee. But deep party divisions remain at the start of a pivotal week for the president and his teetering re-election campaign. Let's bring Bloomberg Balance of Power co-anchor Kelly Lyons. And Kelly, as we hear these calls, we're also hearing, again, this sort of note of defiance from the president saying that he's the only man for the job, that, he faces these cognitive tests every day, that he's not going anywhere, but the pressure is building.
The pressure certainly is building, Heidi, and yet Joe Biden is not changing his tune, it seems, maintaining that not only is he staying in this race, he does believe he is the only Democrat capable of beating Donald Trump. Since he did it in 2020, he thinks he can do it again. And in that ABC exclusive interview that happened on Friday, he suggested the only way he would drop out of this race at this point is if the Lord Almighty came down and told him to do it. Now, there are other voices other than the Lord Almighty that may influence the ultimate decision the president comes to, including those of trusted congressional leaders like the Senate Majority Leader Chuck Schumer or the House Democratic Leader Hakeem Jeffries, who actually on Sunday convened a call with other high-ranking congressional Democrats, Democratic leaders of the many House committees. And on that call, we understand some of them did express a desire for President Biden to drop out. There are other workings as well in the Senate. The Senate Intelligence Committee leader, Senator Mark Warner, has talked about putting a group together for discussion as to whether or not Biden should stay in the race when Congress returns to Washington this week. So you could see these calls starting to grow. The other thing, in addition to the voices of Democrats that ultimately will matter, though, is polling. And while some national polls have suggested Trump has widened his lead over Biden in the week and a half since the debate, our Bloomberg News Morning Consult poll that just came out over the weekend shows Biden actually with his best showing against Trump since we've been doing this poll. He's only down by 2 points, winning in the states of Michigan and Wisconsin, 2 of the 7 crucial swing states that we watch in this poll. He does, though, have his biggest deficit against Biden in Pennsylvania, a critical state where he was campaigning on Sunday as his campaign goes on, despite some calls to the contrary.
I love what Senator Bernie Sanders said earlier, that this is not a beauty contest. He seems to be firmly backing President Biden. What are we expecting when it comes to those campaign activities that you mentioned? Will President Biden be making the rounds in the next few weeks?
Certainly, especially to those critical swing states, the likes of which Bloomberg has polled. He was in Wisconsin over this weekend and then, of course, made 2 stops in Pennsylvania on Sunday, one in Philadelphia, another in Harrisburg, where he really was greeted by supporters, largely who did seem to rally around him. The question is going to be how he can potentially maintain that going forward with these escalating questions around his mental acuity and growing calls within his own party to drop out. I would point out that it's a critical week here in Washington as Washington is hosting the NATO summit, and President Biden has to prove not only to American voters that he is capable of standing as the leader of the free world, but to the dozens of U.S. allies that will be gathering in his hometown as well. It's going to be a very high stakes moment for him. We do expect he will hold a press conference later on this week where he is going to have to ad-lib questions or answers to questions from reporters, and that could be a critical testing moment for him as well.
Bloomberg Balance of Power co-anchor Kelly Lyons there. And coming up on the Asia trade here, why Vanguard Group expects most central banks in Asia to continue to hold rates steady. We ask UBS Securities whether they think Japan's stock rally can continue. We also talk market strategy with M&G Investments. This is Bloomberg.
Let's get you a look at the week ahead, and it is a big week indeed for Asian central banks. Rate decisions due from South Korea, New Zealand and Malaysia. Bloomberg Economics expects all 3 to keep their rates unchanged as currency concerns ward off cuts. We're also getting the June reading for the US CPI just after Federal Reserve Chair Jerome Powell testifies before both chambers of the US Congress. And the NATO summit will also begin in Washington on Tuesday, Shery.
Yeah, we'll also be on watch for bank earnings in the U.S. as if everything you said wasn't enough. Citi expected to post higher and bottom line results, while JP Morgan could see its profit contract for the first time in almost 2 years. And we'll also get results from Wells Fargo later in the week.
And of course, you'd expect some sort of trepidation when it comes to a lot of these earnings, right? Citi expected to post higher top and bottom line results. JP Morgan could see the profit contract for the first time in almost 2 years. And taking a look here in Asia as well, Japan's retail giants and India's IT firms are also reporting.
Yeah, Uniqlo, owner of fast retailing here in Japan, Muji parent Ryohin Keikaku could both see double-digit operating profit growth in the quarter.
And we'll also be watching, Shery, results from Tata Consultancy Services. HCL Technologies also one. They could signal a recovery starting to take shape in the Indian IT space. It has been quite a long drag that we've seen in that space. Let's take a quick look at how US futures are shaping up. As we mentioned, that CPI print will be sort of front and centre after the eco data that we were firmly eyeing towards the end of last week. And a lot of the sort of divergence plays from Asia very much dependent on what we see in that print this week. S&P futures looking pretty lacklustre at the moment, about 0.1% lower there. And as we can see, not a great deal of election or sort of political concerns being played out yet in terms of investor appetite, but we're certainly watching that both in France and in DC very closely. Let's bring in Wang, who's the Chief Asia Pacific Economist at Vanguard Group. And Shery and I were talking and musing a little bit earlier about some of the sort of fiscal versus monetary tensions that are starting to develop. And it's really being exacerbated by some of the uncertainty over the political landscape. Is that a big risk for Asian central banks?
You look at the Asian central banks, right? I mean, it is our view that they are more likely to stay on hold at this moment. One thing I would definitely say is that they want to take some time to get more clarity on their inflation outlook. As well as to observe what Fed will do, right? You know, Vanguard view on the Fed is somewhat on consensus because we are not expecting Fed to cut this year, mostly due to the sticky inflation, right? So I think that is where it's adding concern to Asia's central banks about, you know, currency weakness as well as renewed pressure on inflation. So generally speaking, I think they will prefer to stay on hold at this moment.
You mentioned the key factor there is what the Fed will do, right? What do you think the biggest risks are, given that we already know, even in the current scenario, that fiscal creates, you know, potentially an ever bigger problem for Jay Powell and the FOMC?
I think we look at, U.S. economy, right? The U.S. economy, obviously, last Friday, the non-farm payroll report was showing that the labor market actually cools a little bit, and the economy is slowing, right? So, but to a certain extent, I think it's still slowing towards a trend-like pace, you know, slightly below trend for the second half. So there is still continued growth. So I think the focus for Powell is really on the inflation side, right? And I think, you know, the uncertainty, especially as we just mentioned earlier, the political uncertainty, right? This is where I think probably will put Fed actually to err on the side of caution. This is where I think they would just wait a little bit for more clarity on inflation rather than cut immediately.
Is that wait-and-see approach also going to be the case for the Bank of Korea, the RBNZ as well, given the uncertainties that we just talked about?
I think, you know, even they are going to stay on hold, right? As we mentioned, for those central banks, I think there are still some differences, right? Like Bank of Korea is probably going to be a dovish hold, right? So when you look at Korea, I think their domestic demand is pretty weak, especially in the construction sector and also household consumption. And inflation actually surprised on the downside, right? So I think this is where they stay on hold, but they would like to, have a more dovish tone to signal a pivot, in coming months. But on the other hand, I think, when you look at, Bank Negara Malaysia, or, Bank of New Zealand, right? I think those are more of a hawkish hold, right? So they probably will stay on hold, but will continue to war about sticky inflation.
How difficult is the case for the Bank of Japan? Of course, a whole different problem when it comes to not getting that sticky inflation that they want. We are getting that wage growth number just at the bottom of this hour, but really has been the lack of domestic demand in this economy that's held the BOJ easing, despite the fact that the yen still keeps touching record lows.
I wouldn't say in Japan is a totally different story. Even though they are going to move into a different direction, to a certain extent, from an inflation perspective, they are just being late, right? But it's the same story. It started with reopening, imported inflation pressure, and that fed into domestic, demand pulled inflation, especially when wage growth is coming up. So right now, I think they are just late in this hiking party, and then. Most recently, I think the BOJ is actually getting more confident about policy normalization, right? There is a positive, cycle of rising wage and, inflation. And they are also actually getting more concerned about the weak currency and its impact on imported inflation, as well as the damage on consumer spending and sentiment, right? So I think that actually gave a lot of incentive for BOJ to hike interest rate at this rate. Now, of course, I think there's a lot of concern about, consumption is still not strong enough. But I think that's where the fiscal policy is actually play a role, right? The government is providing tax subsidy, and they are talking about potential, bigger hike in terms of minimum wage hike. And also, I think the real wage growth is going to accelerate, pick up as well down the road. So I think that actually gives enough, incentive for BOJ to hike.
There's still not a great deal of confidence when it comes to China, right? And I think you really sort of succinctly made the point that the measures that we've seen from authorities might protect broadly from the downside, but we're not going to see all that much upside. Is this sort of just the new normal now for Chinese growth?
Yeah, I think when you look at the, China, right, I think China interest rate right now is somewhat low. PBOC has refrained from, cutting interest rate, partly because of the Fed and partly because of the concern about domestic banks, interest margin. But I think, eventually China would still need to cut interest rate and lower the interest rate down the road. When you look at this economy, right, China is in deflation. So when you look at the real interest rate, it's actually pretty high. It is restricting the economic recovery. So I think this is the economy that's actually crying for more easing, both on monetary side and, fiscal side. So either to support the economy growth or from a medium-term perspective, China wants to engineer smooth deleveraging. And also, by the way, our star is also coming down in China because of a lower trend growth. So all of that actually argue for a lower interest rate down the road. It's hard to tell about the timing, right? But we still expect interest rate cuts this year, and down the road, we should continue to see the interest rate to stay lower for longer in China.
Yeah, we'll be watching the third plenum to get more on that economic policy coming from Beijing. Wang, good to have you with us, Chief Asia-Pacific Economist at Vanguard Group. We have more ahead on the Asia trade. This is Bloomberg.
All right, we do have some breaking news just coming through from Japan. Labour cash earnings coming through. We are getting that number of 1.9%. The expectations were for 2.1%. And in fact, I should say the survey was for 2.1% and coming in at 1.9%. So actually shy of expectations. Bloomberg Economics were expecting that gain of over 2%. In fact, decelerating from that 2.1% from the month earlier. Real cash earnings year on year coming in at a contraction of 1.4%, also a steeper contraction than the expectation of 1.2% of a fall, and accelerating there in terms of the steepness of that fall from that 0.7% in the previous reading. Perhaps a little bit surprising given that we had the spring wage negotiations reflecting some of those gains. But for more, let's bring in our Japan economy and government reporter Erica Yokohama, who joins us now. So does it surprise you, I guess, in terms of these numbers?
Actually, not that much because, there are a lots of number in this Japan's monthly wage report. But if we are actually focusing on the underlying trend, we have to look beyond the headline figures. Base wage, for example, rose 2.5% from a year ago. Then that was like largest hike since 1993. And also, there's a stabler measure called same sample data, which exclude overtime pay, bonuses, and avoid sampling issues. Then that rose 2.7%. That was like a record since the ministry started tracing the number. So, the headline figure is a little bit not convincing, but the underlying trends based on these figures points to the strong wage momentum, actually.
It concerns me that the previous month numbers were revised down as well. What does this mean for the BOJ come July? Because so many people were expecting that rate hike, but it seems that the situation may get a little bit trickier.
That's true. Yeah, so today's data, I probably say it's a little bit stronger considering the underlying trend. But so I think that it will help the BOJ to explain and useful for the BOJ to explain if it actually does the rate hike in July. However, as you said, given a series of recent weak data, I don't think this single data will give the BOJ a full green light. The last week we had revised GDP, which showed further contraction than initial data. And on Friday, last week we also got household spending data, which turned out much weaker than expected. So probably today's data will help the BOJ to explain any potential tightening step, but I don't think BOJ will be totally happy and comfortable with such kind of moves.
Yeah, I mean, last week's household spending was very surprising to me too. But given, of course, that we have seen those negotiations, the Shunto wage pay and hike being increased, what does this mean then going forward for the wage trend here in Japan?
That's right. So I would expect the wage figures to gain further, given that, as you said, the strong wage gains in the pay negotiation this year. So Rengo, Japan's the biggest union federation, last week released the final tally, its spring wage negotiation result, in which showed a 5.1% gain. That was also marking the highest since 1993, so over 3 decades. And these results should be reflected gradually towards the end of the summer. And some economists saying that only less than 50% of these results are reflected in the May payroll based on their observation from the last year. Given that, I would expect there is some scope for wages number to grow a little further, and will give BOJ our further confirmation that wages and prices are rising sustainably.
Our Japan economy and government reporter Erica Yokohama there going through those wage numbers. And of course, we haven't seen really much of a reaction in the yen, and even to the political turmoil that traders are still digesting, right? The election results in France, the euro, the Aussie, softer in early Asia trading. If we get over to Garth Reynolds now, who leads our Bloomberg Markets Live Asia coverage. So, Garth, we often see the Aussie bearing the brunt of some of the risk aversion, but also we're coming off quite a run for the Aussie dollar.
Yeah, well, I mean, the move down of the Aussie early on was quite noticeable, and definitely flagged that there are some concerns about the risk outlook going forward. It has since come back to be just about flat, which speaks to you were flagging. There's that strong uptrend in the Aussie dollar, and honestly, I would argue it would probably be, in fact, gaining today if it was not for the uncertainty surrounding France and some of the other uncertainties out there, because we also had the US payrolls out on Friday that very strongly signaled chances for an early Fed cut and even for a couple of them this year, whereas the RBA is seen at best holding rates through the rest of the year. So I think that monetary policy side of things has come through a bit more as we get into the day, but the Aussie's initial decline, and it's still slightly down now, that does speak to some sensitivity out there to the potential for impact from this very uncertain French situation.
And we also do have a lot to digest within the region. Of course, we have the BOK rate decision, RBNZ. What are some of the other idiosyncratic stories that investors will need to watch out for this week, Arf?
Well, in many ways, the biggest idiosyncratic Asian story, or at least one of them, is the one you already flagged, where that Japanese data was yet again the sort of thing that might encourage the BOJ to trend, as that they don't need much help, to trend towards gradualism, especially after that US data meant that the pressure on the yen from the US dollar has lessened. Then the other thing we're looking for in the region is what's going to go on with China. Will equities there continue? They've had a 7-week decline. The main benchmark, the CSI 300, has now erased its year-to-date gain. Does it keep on going down at a time when most of the rest of the region's equities are going up? That's going to be a very key question. We've got China CPI that will have some impact on that. Everybody also is looking forward to the plenum for the Chinese rulership that is coming up next week, I believe, and that is seen as holding out perhaps some hope that there will be measures that could convince people that China's market can turn around, because at the moment that's the one sort of drag on risk sentiment across the region.
Garfield Reynolds, who leads Bloomberg Markets Live Asia coverage, and we'll be also watching another stock in South Korea to see if that could be a drag for the broader markets, especially in that country. Workers expected to go on strike later Monday. It's said to be the second ever walkout by staff in the company's history. Our tech reporter Annabelle Drulers joins us now. And Belle, of course, we saw some stellar results when it comes to Samsung last week for the preliminary figures, but this could really throw some risks for the company. This is an escalation from the strike back in June.
Yeah, that's right, Shery. We had the one-day strike back around, say, 6 weeks ago. That was, as you said, one day more about sending a signal. This one today is certainly about upping the ante, and it's also about trying to disrupt production. So the key parties here, there's Samsung, there's Samsung's biggest union, and then there are the workers who have been pretty unhappy with their pay, and we can get more on that in just a moment. But what is in store, as we said, it's a 3-day walkout, Monday, Tuesday, Wednesday this week. The union in question, it counts just under 30,000 members, and so it's told us the aim is for about 5,000 of those to join rallies outside Samsung's chips plant. That should start at 11 a.m. local time, so just really a couple of hours from now.
Not great timing for Samsung, Belle.
Yeah, really not, especially when you look at that sort of very high-stakes competition around AI chips in particular, because even though Samsung, of course, is such a major chip maker, its peer in Korea, SK Hynix, is leading the pack when it comes to HBM or high-bandwidth memory chips, which are really, really important to AI infrastructure as a whole. So now Samsung is not only trying to catch up in that race and putting a lot of efforts into it, into efforts like attracting NVIDIA, for instance, to use its HBM products. We've also just seen a new head of its chips division within the last couple of months. So there's not only that organizational change, there are challenges as well facing a very critical part of its business. And so any disruptions here do risk having a ripple effect, especially when it's not just HBM chips. We're talking about Samsung being a key player in memory markets as well.
So what's Samsung doing to try to appease workers then?
Well, as I said, really all of this comes down to that key pain point around pay in particular. At Samsung, this is calculated, or bonuses, they're calculated using a very complex process. The union not only wants to simplify that process, they also want to make it more transparent as well. Bonuses, they're particularly important. They're important for everyone, but they're important at Samsung because they make up a lot of the worker pay, or they have the potential to not make up that pay because actually, as we said, this dispute relating to the chips division in particular, last year workers in that division didn't receive any bonus at all because the unit lost money. So now the union is concerned that even if the chips division does make money this year and turn a profit, the workers won't receive all of their bonuses. The effect that Samsung is, of course, aware of this and is trying to make amends. Well, actually, we're hearing from local media that last week they announced that they would be giving a first half bonus for this year. They're paying up to a maximum of 75%, but it does depend on which part of the chips division you're working within. But still, it's obviously Samsung being aware of this concern. Still, though, that bonus up to a maximum of 75% of monthly pay for the first half of 2024, it does fall short of other bonuses we've seen from the company in the past. So the question is whether they're going to be prioritising profits for shareholders or contributions from workers. But clearly, this dispute still has a ways to being resolved. Shery.
And the Bell Jewelers there with the latest on Samsung. Will be waiting for the market opens in South Korea to see how Korea's largest company trades. This is Bloomberg. Japanese stocks are in focus after the year-long rally was tested towards the end of last week. The cheap yen and the hunt for winning trades under a possible second Trump presidency may provide some tailwinds.
Yeah, but Shery, an informal survey of Asia-based strategists and fund managers actually suggests investors are favouring emerging market giants India and China. Yes, rotating back into China over Japan for the second half of this year.
Oh, no. Let's bring in our next guest who's still relatively optimistic about Japan, but watching out for risks ahead. With us now is Nozomi Moriya, Japan Equities Strategist at UBS Securities. It's great to have you with us. Of course, we have seen even labor cash earnings earlier, real wages contracting even further. How big of a risk is it for the markets if domestic demand doesn't recover?
Yes, we are relatively optimistic about Japan equities because we are now on the track to normalize the Japanese economy and Japanese policies, including the monetary policy. And the domestic consumption could be one of the risks for the normalization of the whole Japanese economy because for the corporate side, we are seeing the rise in the corporate inflation expectation, and they are moving forward to proceed the corporate reforms, while the household inflation expectation is still low with a stickiness to the deflationary mindset. So the delay of the domestic consumption recovery could be the risk, but we are not that concerned much from the May the number because we are expecting real wage to turn around to positive growth in the coming months, along with the reflection of the spring wage negotiation.
My question would then be when the sentiment around the country really turn around, because although we have seen a lot of optimism from investors, especially foreign investors, being in Japan, I don't really feel that optimism when it comes to my friends, when it comes to people just trying to spend money within the country. So if you don't get that virtuous cycle, how big of a problem is this for the BOJ and also just for markets looking at what's happening in this country?
Sure. We expect that the turnaround of the real wages would lead to the better consumer sentiment from here, while we need to be careful about the possible impact from the recent yen depreciation, because in the past 2 to 3 months, we saw the deterioration of the consumer sentiment, while we saw the very strong spring wage negotiation results. It was a little bit disappointment to us as well, but we know that the real wage is still negative. So if we can confirm the turnaround of real wages, it would lead to at least the bottom out of the consumption and the consumer sentiment. And we expect BOJ to raise the rate next time in October after confirming the bottom out of the consumption and the real wages.
How much materialization have you seen of governance reforms, or does that still sort of anticipate further structural changes?
Yes, that's promising side for Japan equities because corporate inflation expectation is already higher than 2%, and they know they need to change the actions from the deflationary period. In the deflationary period, they focus to pile up the cash and excess capital on the balance sheet. But now the Japanese corporate have the inflation expectation, and they know they should utilize the excess cash and excess capital on the balance sheet. And we are seeing the acceleration of the shareholder returns. And in addition to the shareholder returns, we are likely to see the improvement in the productivity as well through the acceleration of the business portfolio review and the growth investment.
In terms of sector enhancement, where do you see value, particularly as we've kind of cycled through some of the early stage rallies?
Yes, in near term, there should be some focus on the exporters because they are the beneficiary from the yen depreciation on their earnings. And we also think that the tailwind for the financial sectors could continue along with the expectation for the normalization of the monetary policy and the interest rate. But more important, if we can really confirm the domestic consumption recovery, then it could lead to the catch-up of the domestic consumer sectors because consumer sectors have been the main laggard in the Japan equities.
Even with all the tourists.
Yeah, that's true. Yeah, so inbound tourism are still quite strong, but the domestic consumers, we need to watch to improve from here.
Heidi, you didn't spend enough in the few days that you were
I've got to do a better job.
No, but something that Heidi was mentioning earlier too, that some investors are talking about switching from Japanese assets to Chinese or Indian assets in the second half. Are you hearing that too?
We heard that in April and May, but I feel that that kind of concern for Japan is a little bit muted now because, of course, there is remaining the conservativeness around the real China pickup as a whole economy. And for the Japan side, we can expect short-term positive impact from the recent yen depreciation on the earnings of exporters. And we are expecting the turnaround of real wages from here. So I feel that the overall interest in Japan remains quite high, particularly among the global investors.
Nozomi, Moriya, really great to have you with us. Of course, the Japan equity strategist at UBS Securities. We appreciate your time and coming in. Really great to chat about kind of the next step, right, for this Japanese equity rally. But also we're getting perhaps a little bit more cohesion when it comes to the political result. We've been talking about politics all week. And in fact, it's been really interesting being in Tokyo and watching some of the activity around the governor's race, right? And we have seen the Tokyo governor, Koike, really securing a third term now as governor. Does this, I guess, give a little bit of relief for the Prime Minister?
Yeah, I mean, the Prime Minister's party, the Liberal Democratic Party, did not officially support Koike, but they didn't field their own candidate. So with the Prime Minister really battling its support rate at its lowest level since 2021 when he took office, this could be a little bit of a boost for him and his party. But of course, we've been watching this race very closely because of some of the issues that have been raised, including fertility issues. Of course, Heidi, you know, we have been talking about the birth rate in Japan for the longest time.
Yeah, the demographic challenges.
Demographic challenges, aging population, really the number of children being so low here in Japan as compared to the total population. And those were one of the key issues when it came to the Tokyo governor race. I went out and sort of took a look at what's happening in this country. Of course, something that's happening across many other developed economies as well. Take a listen.
Oji Holdings is in the diaper business, but probably not the type of diapers you're thinking of.
The market for baby diapers in Japan is becoming smaller and smaller because the population is decreasing. The fact that the market is getting smaller means that someone will have to exit the market sooner or later, considering profitability.
A declining birth rate and an aging population have led Oji Holdings to focus on diapers for the elderly. About 1 in 10 Japanese are now over 80 years old. And the number of children has dropped for a 43rd consecutive year, while the ratio to Japan's total population is at an all-time low. The Tokyo government is now trying to help reverse this trend by providing egg freezing subsidies for women and even launching a dating app.
Tokyo is providing seamless support at all stages, from starting a relationship to marriage, pregnancy, childbirth, and the healthy growth of children.
An aging population is not just a Japanese problem. South Korea has the lowest birth rate in the world, while China's population has declined for a second straight year. How Japanese businesses and government deal with chronic labor shortages and ballooning medical and social security costs will be closely watched as other economies battle their own demographic woes.
And we have breaking news out of Japan. We're getting the current account balance coming in at a surplus of 2.85 trillion yen, which is a much larger than expected amount. When it comes to the trade deficit, 1.109 trillion yen, also a smaller deficit than expected. Of course, we have an incredible weakness of the Japanese yen pushing up import prices for this energy importer. Again, the current account surplus coming in at 2.85 trillion yen, and the trade deficit a little bit smaller than expected. This is Bloomberg.
Time now for morning calls ahead of the Asia trading day. New Street Research saying that Nvidia's rally, Shery, could finally lose steam. It's a brave call. Analyst Pierre Farragut downgrading the AI darling to neutral from buy. He says that the stock is getting fully valued after soaring over 115% this year. Farragut says additional upside for the stock will only materialise in a bull case in which the outlook beyond 2025 then increases materially.
And of course, we continue to watch Tesla as well. And Morningstar is expecting the company's profit margins to improve. Analyst Seth Goldstein attributes the upbeat outlook to lower production and raw material costs. He also says the company could return to profit growth next year, depending on how it handles the market's intensifying focus on affordable EVs. And of course, hedge funds that piled into short bets against the EV maker got stung by that huge rally last week. Data provider Shery shared with Bloomberg that about 18% of the 500-plus hedge funds it tracked had an overall short position on Tesla at the end of June. That's the highest percentage in over a year. And of course, we'll continue to watch, Haidi, what happens to those EV makers in the Asia session as well.
Yeah, we do have the market opens in Sydney, Seoul and Tokyo. And next, of course, so much focus when it comes to political uncertainty, both in France and also in the US, with more pressure on President Biden, even within his own democratic realm. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. And of course, Haidi, will be waiting to see the first market reaction when it comes to the French election results. What a shock victory for the leftist alliance.
Yeah, and again, it's one of these situations where the polling keeps getting it wrong, right? We keep getting lulled into these narratives that turned out to be completely wrong in a very outsized way. So, very difficult situation. We know that this is a country that's not used to having to deal with coalitions, so a great deal of uncertainty, also a great deal of uncertainty when it comes to the US as well.
I know. The presidential elections and the pressure on President Biden to step out of the race, especially with more congressional Democrats trying to find a new candidate. But President Biden defiant and staying in the race, and even Senator Bernie Sanders saying this is not a beauty contest. So we'll continue to watch the ramifications around that, as we're also, of course, here in Japan watching the market opens, with the Nikkei really not doing much at the open. But of course, we had that incredible resilience when it comes to global markets to all of these political risks. The Japanese yen at the moment strengthening a little bit. We saw a little bit of strength last week against the US dollar, and perhaps we're reacting to the fact that Japan May real cash earnings fell more than expected. Of course, we're watching the pay growth number given expectations of what the Bank of Japan will do next. We are getting the trade balance numbers as well, and that deficit also coming in lower than expected. The Kospi opening like this, we were watching for Samsung Electronics because they're facing a strike, but this after preliminary results last week grew at the fastest pace in years, and of course it's BOK week as well.
BOK week is there's a lot going on. Not to mention, of course, we did see a little bit of a reaction when it comes to the political pressures that was sort of expressed more or less through the Aussie dollar, which tends to kind of react as a broader kind of risk proxy, but even that has regained some of those earlier losses, and in fact the strength in that Aussie really being determined by this perceived gap that's widening between the FOMC and the RBA. The expectation that we have about a 40% expectation of a hike from the RBA in August. We had that partial gauge of consumer prices showing that inflation actually accelerated to 4% in May. So we're seeing that really support some strength, or at least some resilience in the Aussie dollar. 67.45 is what we're tracking. Obviously, we're coming off the longest winning streak for the Aussie in about 18 months there. So that run could potentially continue, notwithstanding some of these geopolitical risks. Watching Aussie bonds as well, and in fact, Aussie bonds and Kiwi bonds are tracking the gains that we saw in the US. Treasuries, of course, getting that reaction to the US jobs report that really kind of sent off that rally across Treasuries on Friday. But we're watching for some further data this week, Shery.
Yeah, I mean, it's really about that connection between geopolitics, risk, and of course what happens monetary policy because of it. Let's bring in our next guest, who continues to see opportunities across Asia. With us now is Vikas Pershad, Asian Equities Portfolio Manager at M&G Investments. Great to have you with us. Of course, you are seeing opportunities across Asia, but I do wonder how much you're factoring in these geopolitical risks, especially with everything that's going on in Europe. And as we discussed with Haidi earlier, even in the U.S. and the presidential election in November.
Good morning. It's wonderful to be back. As we've been talking about for the past 2 to 3 years now, since the world started moving out of COVID, is that more than interest rates, more than any particular FX cross rate, our focus on a top-down basis when we construct our portfolios has been on geopolitics. And what does that mean for supply chains? What does that mean for consumers? What does that mean for governments and their policies? So yes, that is definitely what we're focused on, and it is what we have been most focused on.
You're saying that you see opportunities across the board when it comes to Japan, but we are hearing a little bit more skepticism, as we were discussing this morning with Haidi, when it comes to what happens in the second half.
Well, our view is that the earnings growth will continue, and that markets, as we know, will continue to follow earnings. The three questions we get asked most often when we speak to investors and market participants is it too late to get into Japan? Is it too late to get into India? And is China investable? The answer to the first two questions is a resounding no, it's not too late. And then for China, yes, it's very much investable. And there are a lot of long-term opportunities. And all these three markets are connected. And I would add in South Korea to that list as well, that investors should be paying even more attention than they have been to South Korea as well.
Yeah, it's interesting you talk about the interconnectedness of these markets, because we have seen initially that flow out of China into India, into Japan. Now we're starting to see, at least anecdotally, a flow back into Chinese markets, despite what has been a prolonged period of, pretty pressured performance, right? So in terms of how you would allocate across these 3 to 4 markets, what does that look like to you?
Well, in this year, we have allocated more capital to these 4 markets than to any others in Asia. Some of that has come out of Southeast Asia, some has come out from other parts of the region and into these 4 markets, a little bit out of Taiwan as well. Taiwan isn't as broad and deep as the other 4 markets that we mentioned, but there are plenty of opportunities. In China, the near-term earnings outlook is not nearly as strong as it is in India and to Japan and in South Korea, but there are plenty of opportunities for relative and absolute performance in China as well, across multiple sectors. The consumer sector in particular, especially focus on domestic companies in the consumer sector, on the automotive supply chain, beyond batteries and beyond OEMs, there's plenty to do there. Factory automation, semiconductors as well. We are yet to get back into the mega cap China tech space. That's somewhere where we've been lightly positioned for the past 3 years, but there's plenty of opportunities in China.
In fact, we're on the longest losing streak in 14 years for China stocks. 7-week streak is the longest since 2012. We're kind of back to where we began at the start of this year, right? So if you take a look at, I guess, nearer term as well as medium term opportunities for China, what would you want to see from the plenum, from policymakers that would upgrade that view?
I think they're doing the right things, or they're trying to do the right things. China will do implement policies China's way. What we see on the ground is that though the consumer is constrained, there are opportunities. There are some leading companies in China that are taking advantage of technology to beat international rivals. If you look at the coffee space, for one, if you look at food and beverage in general, there's a lot of opportunities there. And you look at what is happening in the automotive sector, that is driving supply chains across the region and around the world. And so we are participating in those supply chains as well.
Yeah, tell us a little bit about those tech calls, because we have seen, of course, incredible Magnificent Seven rally. How does that translate not only to Chinese tech names, but also across Asia?
Well, then for that, I'll draw your attention to South Korea, because South Korea in search and in e-commerce has had local companies lead the way for years and years. The search market has been resistant to Google. The e-commerce market has been resistant up till now to foreign companies, especially the US companies. That advantage is now weakening. And what you're seeing in the e-commerce space is the Chinese players coming in the search space, the domestic companies losing market share. And so though we are very excited about South Korea, and we can touch on value up also if you like, the tech space, just as we are in China, we are cautious. And so we're taking some capital out of that, and it's allowing us to add more capital into the semiconductor space in South Korea, the MLCC space, the capacitor space in South Korea, but then also some of the domestic companies and banks as well. We also shouldn't forget the large auto IPO of a Korean company that will have been in India. And again, coming back to this point that all these markets are related, that then has ramifications for some of the Japanese companies that are operating in India and others as well.
Because I wanted to draw your attention back to China, because we are hearing more about PBOC preparedness when it comes to market operations. The People's Bank of China saying they'll conduct repo, reverse repo on market conditions, that the operations will be conducted between 4 to 4:20 p.m. Duration is overnight with fixed rates, and we're just getting sort of a few more details in terms of the PBOC's plans. Broadly speaking, we've seen kind of the view that what policymakers are doing, what monetary policy is doing, is sort of being able to maintain or limit exposure to downside risks. It's not necessarily enough to produce positive growth. Is that sort of your view as well? And what do you expect from the PBOC, or what would you want to see in terms of perhaps, bigger gestures here?
I think that's fair. The way we select securities on a bottom-up basis and construct the portfolio on a top-down basis is that it's not contingent on one particular level of interest rates or any particular FX rate. And so for us, if we find our spaces that are more sensitive to those decisions, then we tend not to be in them very heavily. So banks, actually, and I'm glad you asked about this, because banks is one area that we have lightened our position this year, and we continue to do so. This isn't Chinese banks, I'm saying. The property sector, we have not been very involved. And property derivatives also, we have not been so heavily involved. And so as these policy initiatives continue to evolve and they have their impact on the market gyrations, we are looking elsewhere to areas that are less sensitive to all this.
Vikas, really great to have you with us. Vikas Pershad, who's the Asian Equities Portfolio Manager at M&G Investments, as we had that news from the PBOC to conduct repo, reverse repo operations on market conditions. We'll get more ahead on the Asia trade. This is Bloomberg. A left-wing coalition is on course to win the most seats in France's legislative election in a surprise blow to the far-right leader Marine Le Pen.
Yeah, and a leader of one of the parties in the new Popular Front alliance says the nation's wishes must be respected.
A majority has made a different choice for the country. From now on, the will of the people must be strictly respected. From now on, no subterfuge, arrangement, or combination will be acceptable. The lessons of the vote are irrefutable. The defeat of the President of the Republic and his coalition is clearly confirmed.
For more, let's bring in Bloomberg's Oliver Cook, who joins us now from Paris with the latest. And Oliver, so again, polling have misled us. Take us through the outcome.
Yeah, listen, I mean, this is a real shocker compared to what we had been expecting and what we've been sort of for weeks, the polls saying that the Rassemblement National, the far right of France, this party that has been sort of been trying to grope for power for decades and decades, this was supposed to be the election where they sort of broke through, became the #1 party in parliament, really upset the whole political system. But that just did not happen. They came in at the third party. You heard there Jean-Luc Mélenchon, part of the coalition of the left, is one of the big parties that sort of came together in order to defeat them. But then even Macron's party, Macron, the intensely unpopular and who everybody thought made a sort of insane political calculation, came in second. So really sort of upsetting all of these sort of preconditions and preconceptions that we had going into this. However, there still is no absolute majority. And this is going to be the sort of focus in the next coming hours and days about how they can actually form a government. Because while you have not had the Rassemblement National sort of sweep, and you did have the so-called barrage, which is what they call here the sort of French political tradition to block the far right, you do not have an absolute majority, and this is just something that is going to continue to rumble on. And just to give you sort of illustrate some of the tensions that we were talking about kind of going into this, I mean, for the last 2 days that I've been here in Paris, you saw a lot of the storefronts putting up sort of barriers and things to protect them from sort of any kind of protests and demonstrations that there would be. 30,000 police officers distributed across France. There was a lot of tension going into this, and it really did not materialize.
No wonder we're seeing efforts to form the new government really fast. The French Prime Minister has already resigned. What's next?
Yeah, so listen, he's going to tender his resignation to Macron tomorrow, and then traditionally speaking, then the president would go to the party, the coalition with the greatest number of seats, and ask them to form a government. Now, this is where things get kind of interesting, because this sort of left coalition was done as a sort of emergency measure in order to sort of block the far right. There are a lot of parties within this coalition that don't really see eye to eye, and that really don't see eye to eye with many of the other mainstream. Now, we heard from Jean-Luc Mélenchon in the intro there, and he is actually the one who spoke very, very closely after the exit poll drops, really trying to put himself forward, saying that we now have a mandate to form a government. Have a listen to what he had to say and some of the tensions that we're going to get within the French government over the next couple of days.
We said it already last, and we reiterate this to the President of the Republic. We refuse to enter into negotiations with his party to make wheelings and dealings, especially having fought relentlessly for 7 years against his policies of social abuse and ecological inaction. The votes of the French people have just confirmed this.
So there from Jean-Luc Mélenchon, really no love lost between him and Macron, saying there will be no deal, that they will only accept that their program be instituted in full. And this is a program, particularly his part of the French coalition, that is actually quite radical and that pushes the thing far more to the left. The question is, will this left coalition hold together with so many disparate views, and will they be able to come forward in government, or could they, for example, sideline Jean-Luc Mélenchon and then have a more centrist left group that could then work with Macron's government? All this is to play for, and we'll still have to finish the last hours here to see the arithmetic and see what's actually possible in the coming days.
Yeah, Oliver Crook there joining us late into the evening in Paris. And take a look at how markets are looking right now. Futures opening, we had seen the euro really recoup some of those earlier losses. But when it comes to the Euro Stoxx 50 index futures, now they're down about 0.4% right at the open. We have seen French bond futures also fall. This, of course, after this shock victory when it comes to the leftist alliance. Last week, we had seen a little bit more stability with the CAC 40, for example, in France, recouping half of the losses after Macron's announcement of that snap poll. But we might see more volatility ahead, and we're really watching closely French bonds, especially its spread over safer German bonds, because they skyrocketed to levels that we last saw during the euro area sovereign debt crisis. They had stabilized a little bit, but Haidi, of course, will continue to watch political risk in Europe.
Political risk elsewhere we're watching as well, of course, right? Given to some of the developments that we continue continue to see in the US as well, where we're hearing that more congressional Democrats are now telling their leaders that they want Biden to step aside as the party's White House nominee. But there are still these deep divisions remaining at the start of what is a pivotal week for the president's re-election campaign.
President Biden, though, remaining pretty defiant that he will continue his White House run against Donald Trump.
I'm the guy that put NATO together, the future. No one thought I could expand it. I'm the guy that shoved Putin down. No one thought could happen. Who's going to be able to hold NATO together like me? If the Lord Almighty came down and said, Joe, get out of the race, I get out of the race. The Lord Almighty's not coming down.
Let's bring in our Bloomberg Balance and Power co-anchor Kayleigh Lyons. So, Kayleigh, how much pressure is there on the president, despite the fact that we're hearing, still the attempt to shore up confidence?
Well, despite his best efforts, including campaign stops in Pennsylvania today and Wisconsin earlier this weekend, doing that interview on ABC, we are seeing that the president is losing support among many members of his party. In fact, there's now 9 congressional Democrats who have called for him either publicly or privately, according to Bloomberg sources, to step out of this race. And yet the president is still maintaining he will not do so. He believes he is the best option to defeat Donald Trump in November, having done so in the 2020 election. And he suggested in that ABC interview that he would only step down if the God Almighty came down and told him to do it. That said, we will wait and see whether other congressional leadership like Senate Majority Leader Chuck Schumer or the House Democratic Leader Hakeem Jeffries may be more vocal in pushing him to drop out of the race. That could be something that could influence him and his campaign greatly, as will continued polling that comes out. While national polls do suggest that Biden has lost ground further to Trump in the week and a half since the debate on June 27th, Bloomberg News, together with Morning Consult, did a swing state poll of the 7 key states that will ultimately likely decide the outcome of this election. It came out over the weekend and shows Biden only down against Trump by 2 points. That is the narrowest gap we have seen since we started this poll last fall. And he's actually leading in the states of Michigan and Wisconsin. Notably, though, his home state of Pennsylvania, where he spent Sunday campaigning in Philadelphia and Harrisburg, is where he is lagging by the most, by about 7 points.
Yeah, we have seen him really busy on the campaign trail. But Kayleigh, what else can the president do in order to shore up confidence in his ability to lead?
Well, he might have a lot of opportunities this week when the NATO summit takes place in Washington, Shery. It runs Tuesday through Thursday. We are expecting at the end of that President Biden will partake in a news conference in which he will have to ask or answer to open-ended questions from reporters. And also, of course, this is a chance to show that he does get the trappings of the Oval Office. He is, at least for now, the leader of the free world. So this ability to show that he is mentally acute and can be forceful on not just the American stage, but the world stage could be critically important, and this is going to be something to watch his behavior in the coming days as world leaders, too, are going to be assessing President Biden and bracing, according to our reporting, for the potential return of Donald Trump in November. At this point in time, polling does suggest Trump would pretty handily are polling a bit of an outlier at this point. And the question is going to be if any other Democrat, should Biden choose to step down, is actually capable of defeating Donald Trump. But at this point, this is not a conversation that President Biden really wants to have.
Kayleigh, is it still all about the economy in the U.S. when it comes to these candidates' appeal?
It is, to a large extent, the economy and the border issue-wise do seem to still be top of mind to many voters, and our polling does suggest that. But really at this point in the race, specifically for this candidate, Joe Biden, the problem seems to be his age. He is 81 years old. He is an octogenarian. These are things that he simply cannot change. So in large part, what he now has to prove to voters is not just that he is right on policy, but that he is capable of leading the country for another 4 years, remembering that at the end of a second term, he would be well in his mid-80s, and that is what a lot of voters seem to be struggling with. And of course, his debate performance just a week and a half ago, he really struggled to get some of that policy actually through, given the extent to which he was struggling to really articulate his thoughts. Of course, lost his train of thought, was hard to understand at times as he was battling a cold, but that is really what has precipitated everything we have seen in the days since, and these growing calls for him to exit the race.
Bloomberg Balance of Power co-anchor Kaylee Lyons there with the latest on the presidential election in the U.S. and another election that we've been following. Iran has elected a reformist president keen on restarting talks with the U.S. over a landmark nuclear deal. Masoud Pezeshkian beat his hardline rival by almost 3 million votes in a runoff. Turnout was just under 50%, one of the lowest ever recorded for a presidential vote. Pezeshkian's challenges include the handling of Iran's conflict with Israel.
Indian Prime Minister Narendra Modi will visit Russia on Monday for the first time in 5 years. He's set to meet with President Vladimir Putin during the visit. Russia is India's biggest supplier of weapons and oil, but has been drawing closer to China, with relations between New Delhi and Beijing under strain since 2020. More ahead on the Asia trade. This is Bloomberg. Well, Tokyo Governor Yuriko Koike has declared victory in the latest election, securing a third term, leading the Japanese capital. And so much of this campaign, Shery, has been down to what has been a longer-term issue for Japan, demographics.
Demographics, an aging society, really one of the lowest fertility rates in the world, if not the lowest. So that's been one of the key issues that the Tokyo governor has been focused on. I went out and talked to some of those companies who are changing also their business strategies given this new reality.
Oji Holdings is in the diaper business, but probably not the type of diapers you're thinking of.
The market for baby diapers in Japan is becoming smaller and smaller because the population is decreasing. The fact that the market is getting smaller means that someone will have to exit the market sooner or later, considering profitability.
A declining birth rate and an aging population have led Oji Holdings to focus on diapers for the elderly. About 1 in 10 Japanese are now over 80 years old. And the number of children has dropped for a 43rd consecutive year, while the ratio to Japan's total population is at an all-time low. The Tokyo government is now trying to help reverse this trend by providing egg freezing subsidies for women and even launching a dating app.
Tokyo is providing seamless support at all stages, from starting a relationship to marriage, pregnancy, childbirth, and the healthy growth of children.
An aging population is not just a Japanese problem. South Korea has the lowest birth rate in the world, while China's population has declined for a second straight year.
How Japanese businesses and government deal with chronic labor shortages and ballooning medical and social security costs will be closely watched as other economies battle their own demographic woes. Indian Prime Minister Narendra Modi will visit Russia on Monday for the first time since the start of the war in Ukraine. The trip coming after Russian President Putin hailed close ties with China.
Yeah, let's bring our East Asia government editor John Herskovich to talk a little bit more about this. And obviously this was, best in history in terms of those ties, a friendship without limits. Is this the case when it comes to Modi and India?
Well, Modi is trying to he's looking at Russia and he's looking at China. He has a difficult balance between the two. Russia is the biggest supplier of oil, a big supplier of weapons, and India is having some problems with China since they've had some armed conflict in 2020 at their border. Relations have been at a low point. So when Modi sees this close relationship between Russia and China, it gives him some pause, some concern. And I think this trip to Russia will address a lot of the concerns that he has.
No pause when it comes to Putin looking at India, given that he does want to make it look like he has a lot of friends. Is that the case? Are we going to see a big reception for Modi in Russia?
I think so. India has been a key player that hasn't really denounced Russia for its invasion of Ukraine. The U.S. is trying to push it to do more, but Russia, it's going to see itself more as a global pariah, especially with the NATO summit this week in Washington. The U.S., its partners, are really going to press Russia, and India has been courted by the U.S., and it's also been close to Russia. So this is going to be something that is going to come into play during Modi's visit.
Especially given that we have seen the diplomatic push from Mr. Putin, right? Whether it's North Korea, Vietnam. How does this really position him in regional geopolitics?
Yeah, Putin has really made a lot of advances in the past few weeks. The trip to North Korea helped him with procuring arms for his war in Ukraine. Vietnam going to an old Cold War partner to seek support. Now he has the visit with India. The meeting last week with Xi Jinping during the Securities Summit. Putin has really tried to strengthen his hand by meeting leaders in the region, and it looks like it's paying dividends, and it's coming at a crucial time with this NATO summit going forward, and Putin getting more and more scrutiny and perhaps even more pressure from the U.S. and its partners.
And of course, this NATO summit comes as President Biden is really trying to defend his capability, right? Saying that he's the one who's kept NATO together. At the same time, these betting markets have Trump way up in front. Biden and Harris are virtually tied now. How do you think some of these Asian leaders are positioning going into November?
Yeah, it's really difficult to say because you've seen, from the Japan and South Korea perspective, a really close relationship that's formed in the security front. Biden has looked for help on the economic front. And come November, things could be greatly rearranged. And Trump, when he was president, talked about these open-ended deals, these perhaps removing the troop deployment to South Korea, asking South Korea and Japan to pay more for their defenses. And relationships between the three kind of faltered during that period. Now they're really on an even keel. There have been joint training exercises with Japan, South Korea, and the U.S. The NATO leaders are also worried about what's going to happen. Trump has been no friend of NATO. So going into November, there are a lot of apprehensions, a lot of concerns, and Putin at this time is making his hand a bit stronger.
Especially at a time when we have so much tariff rhetoric coming from Donald Trump, right? How much is all of these relationships just about trade, about the economics for these countries, especially given that China is a big player, Russia is a big player in energy as well?
Yeah, and so much is in economics. On energy, also on semiconductors, because Japan, South Korea are huge players in the market. We have some European players, the Netherlands, which is quite big. But also you have the security front. I mean, the U.S. has committed itself to the defense of Europe, to defense of Japan, and to the defense of South Korea in the post-Cold War era. These alliances have been tested for decades, and they may get a fresh test with a Trump presidency. So you have the economics, you have security, there's a lot going on, and these are deep and long relationships on the economic front and the security front.
A very busy year for you, John.
Yeah, very busy.
Thank you so much for joining us. John Herskovitz, East Asia government editor, there with the latest on really regional politics are ramping up, as well as we have Japan and the Philippines set to sign a military pact. This, of course, as the U.S. now allies tighten their defense ties with tensions with China.
Yeah, Bloomberg's Cliff Van Zoon joins us now from Manila. And Cliff, so the 2+2 meeting to take place in Manila today, what are the expectations going into that?
Right. So as you mentioned, Philippines and Japan are expected to sign their reciprocal access agreement today. That deal is expected to facilitate mutual military visits from both countries. President Ferdinand Marcos Jr. Will witness the signing of the agreement, and he has previously said that this deal is extremely significant because it will help the Philippines boost its defense and disaster response capabilities.
Of course, we have seen a lot of tension around the South China Sea. How important is it for Japan and the Philippines to deepen their defense ties?
Right. So Philippines and Japan already have very close economic ties. For Manila, Tokyo is a major trade partner, investor, and infrastructure funder. It's actually helping build Manila's first subway. However, both countries also have similar security challenges. Philippines and Japan have maritime disputes with China. So analysts say the two nations are actually natural security partners. So Tokyo has participated in joint patrols in the South China Sea and is helping Manila modernize its defense capabilities. So, and also the signing of this reciprocal access agreement dovetails with President Ferdinand Marcos Jr.'s efforts to boost the country's ties with like-minded nations, including U.S. and Australia, as Manila asserts its claims in the South China Sea.
Right, Bloomberg's Cliff Benson there in Manila watching the latest geopolitical developments around Japan and the Philippines, as well as we continue to watch the markets. A little bit of a mixed picture when it comes to the Nikkei, the Kospi. The Nikkei being really weighed down at the moment by utilities, real estate, but we do have some communication services gaining ground.
Yeah, watching what we're seeing across Australia as well. A little bit of risk aversion there, about 0.4% low when it comes to trading on the ASX 200. We did have a bit of a dip, quite briefly, if I'm honest, when it comes to the Aussie dollar, but we're now sort of maintaining most of the gains. We've had the longest winning streak for the Aussie dollar since the start of 2023. So really kind of pointing to the resilience of these bets that the markets have set up for about a 40% chance that the RBA would hike in August. And of course, it seems like that gap between the Fed, the RBA and a number of other central banks is just continuing.
We're talking about resilience. It's about the market resilience as well. And the global rally continuing, the Nikkei, the topics really after we saw those record highs. We'll see if that market continues this week with more political risk. This is Bloomberg.
Taking a look at how Samsung is trading at the moment with some of the industrial pressure at the precipice of this 3-day strike, the largest union aiming to disrupt production at the chip maker, and we could see potentially other activity, labour market activity through some of these other companies as well. But at the same time, we're seeing quite a bit of upside. The Samsung stock, of course, very recently hitting that 3-year high. Shery.
Given, of course, that we got those preliminary results for the June quarter, also the fastest pace of sales and profit growth in years. Of course, we have this huge recovery when it comes to memory chip demand, but we'll see what happens with this walkout. Our tech reporter Annabelle Drewlers joins us now. And Annabelle, this is really an escalation from the strike back in June. So how consequential could this be?
Well, it could end up being quite consequential, especially because Samsung's largest union has signalled that they could actually signal an all-out general strike as well. But putting this in context, so yes, we had that 1-day strike back in early June. That was the first one in Samsung's history ever. Today, this is the start of a 3-day strike, so Monday, Tuesday, Wednesday. As we said, it's really about upping the ante here, about starting to disrupt production. The key parties at Samsung is Samsung's largest union. As I said, it counts nearly 30,000 members amongst it. And what it's asking is for those staff to go on strike today, so around 5,000 people. That's what the union is expecting to join the rally outside Samsung's chip plants. And as we said, that's kicking off pretty soon for now, actually, just over an hour's time.
A lot of pressure points for Samsung at the moment for this to be happening.
Yeah, that's right. That focus really for Samsung's chip division, because even though we did get those better than expected numbers and telling us perhaps the worst of the chip glut is over, there still is a lot of pressure on Samsung to deliver, particularly when it comes to HBM in particular, because we've seen Samsung really just lose so much ground in this high bandwidth memory space. That's a very key part of AI infrastructure. It's lagging well behind SK Hynix, and so it's trying to do better there. at the same time that you've actually had a new head of Samsung's chips division, and that also points to just that sort of organizational change. Just quickly, how Samsung is sort of coping with this. We do understand that they're giving out some bonuses because the dispute relates to pay and bonuses in particular. So for the first half of this year, we're hearing from local sources, or local reporting rather, that they could be looking to pay 75% of a basic monthly salary. Still though, Shery, that does seem to kind of fall short of expectations. Big question where we go from here.
Annabelle Jewelers there joining us from Hong Kong. In fact, some of those questions perhaps can be answered by Bloomberg Intelligence, who says Samsung is set to gain a strong competitive advantage as it develops 1nm chips. The company is planning to adopt new technology to improve the performance and costs of its products.
Yep. Let's bring in for some of those answers BI Asia Pacific Technology Analyst Masahiro Wakasugi, who is here with us. So what is the strategy here? What's the kind of semiconductors that they're trying to develop? And, you know, as we were talking about a little bit earlier, they're really struggling to try and convince NVIDIA to keep using these high-end AI chips.
Yes. So regarding the next generation technology, Samsung is trying to develop the new three-dimensional structure, which is called backside power delivery network. We call it backside PDN. And now we have a problem about the power consumptions, and especially for the AI data centers. But the new backside PDN will cut the power consumption pretty significantly. And now we have new two functions on the same side of the semiconductors. One is the power delivery, and another one is the signal. And so two circuitries are sharing and competing for the space. But if we can move the power delivery from the front side to the back side, which improves the performance and also cut power efficiency going forward. So I think that the backside PDN would be the great technology for Samsung to develop the 1nm chips and also beyond.
So, Masahiro, a key question for Samsung, especially in this next generation chip development, has been its competitiveness against other names, especially its South Korean rival SK Hynix. How is Samsung positioned?
Okay. So, when we talk about SK Hynix, Samsung is competing with on the DRAM or NAND flash memory. And in that sense, probably Samsung's maybe the current issue may be the high bandwidth memory to be used for the AI calculation. And at this point, Samsung may be a little bit delayed compared with SK Hynix, but they are also developing a new technology about the bonding technology and stacking each DRAM chips. And we have to stack maybe 12 or even 16 DRAM chips altogether for the next generation high bandwidth memory. So in that sense, Samsung could be trying to develop new technology for the stacking technology for the high bandwidth memory. And regarding backside PDN, it's about the logic semiconductor, so which is targeting for the maybe like TSMC or Intel. So that's a little bit a different part, but Samsung is handling the two difficult part out there altogether.
And you talk about TSMC, Intel. Is the struggle going to be mass production capability?
Yes, that's actually one big problem. And Samsung is really, to some extent, ahead of the competition because Samsung has already adopted a gate-all-around technology, which is Samsung is using for the 3nm chips. But TSMC is going to introduce the gate-all-around technology for their 2nm chips for probably next year. So to some extent, Samsung is ahead of the competition. So I think that maybe Samsung is learning how to improve the production efficiency, and also they are going to introduce maybe another technology going forward, targeting 2028 or 2030 maybe. So probably Samsung will be adopting several new technologies to compete with the TSMC going forward.
Bloomberg Intelligence Asia Pacific Technology Analyst Masahiro Wakasugi there. Let's take a look at some of the market calls that we're following today. New Street Research saying Nvidia's rally could finally lose steam. Analyst Pierre Ferragu downgrading the AI darling to a neutral from buy, saying the stock is getting fully valued after soaring, about 150% this year and then some. Ferragu says additional upside, Shery, for the stock will only materialise in a bull case in which the outlook beyond 2025 increases materially.
And of course, another company that we keep watching is Tesla. Morningstar expecting the company's profit margins to improve. Analyst Seth Goldstein attributes the upbeat outlook to lower production and raw material costs. He also says the company could return to profit growth next year, depending on how it handles the market's intensifying focus on affordable EVs. Meanwhile, hedge funds that piled into short bets against the EV maker got stung by a huge rally last week. Data provider Hazeltree shared with Bloomberg that about 18% of the 500-plus hedge funds it tracked had an overall short position on Tesla at the end of June. That's the highest percentage in over a year. We have more ahead on the Asia trade. This is Bloomberg.
Big week for Asia earnings. Firms including LG Energy, Fast Retailing set to report. Let's bring our breaking news earnings specialist Rachel Yeo, who joins us now for more. So I'll start off with LG Energy. That's later on today. What are the expectations here?
Yeah, so LG Energy's second quarter earnings will likely be disappointing for this quarter as demand for electric vehicles in Europe are lower. Also, its cylindrical battery customer Tesla is also falling short of demand as it's competing with Chinese EV makers as well. But LG Energy is trying to also commercialize a type of battery technology in hopes to compete with Chinese rivals as well.
I think the other Japanese retailers, Fast Retailing and 7 & I gotta say, Heidi, I really helped their bottom line here, being in Japan, buying their products, Uniqlo pants and whatnot. What are we expecting this week?
Yeah, so we're seeing Fast Retailing quarterly earnings to have double-digit operating profit growth. So actually, spring-summer clothing will likely see a sales boost thanks to warmer temperatures as well. And the retailer is also betting on new types of technologies, including a type of checkout without barcodes, in hopes to meet their annual sales target of 10 trillion yen this year. Also, its fellow retailer Ryohin Keikaku, which owns the Muji brand, will also likely see double-digit operating profit growth. And moving on to 7 & I, their first quarter operating profit will probably decline as it saw sluggish sales in March and April.
Right, breaking news, earnings specialist Rachel Yeo there with what to expect this week. And other corporate stories that we're following, Skydance Media is said to be inching closer to an acquisition of Paramount Global, a source now telling Bloomberg that a special committee of Paramount's board has endorsed the merger with an announcement coming as soon as Monday. Skydance CEO David Ellison is also planning to acquire National Amusements, the holding company of Paramount.
Chinese EV maker BYD to acquire a 20% stake in its Thai official distributor, that's River Automotive. The announcement comes after BYD opened a plant in Thailand's Rayong province, that is its first in Southeast Asia. Meanwhile, the Turkish president is set to unveil an agreement with BYD for a $1 billion plant, boosting the company's presence in Europe amid trade tensions. I'll take a look at how the futures sessions are shaping up at the moment when it comes to US futures. We keep talking about these record high after record high, despite these political concerns both in France and, of course, going into the US election campaign as well. S&P futures looking a little bit on the softer side. Taiwan TAIEX futures are off by about a tenth or so of 1%. And the China session will be quite interesting. We're looking kind of mostly flat at the moment, but we did get the news that the People's Bank of China will be carrying out temporary bond bond repurchases or reversed repo operations depending on the market situation there. So this potential tool that's really come into the market's attention just a couple of months ago, we've been trying to work out how it's likely to be played out in practice. And trading bonds, Shery, has been this shift in how the central bank operates in terms of these reforms on how it conducts monetary policy.
Yeah, so we've been watching very closely the third plenum, of course, and those eco numbers out of China this week as well, CPI, PPI, factory inflation expected to continue to be in deflationary territory for a 21st straight month. We also get those export numbers. But of course, last week has really been about Europe, right? With the UK elections, also with the French elections and that shock victory for the leftist alliance. So we had French bond futures falling at the get-go, the left wing headed for the victory, and really Marine Le Pen's far-right national rally, which had widely expected to win the most seats, is now coming in third. So we had pressure for the euro in the beginning, given the uncertainty there. Right now, it seems to have recouped most of those losses. But what investors will be watching is the risk around public finances, given that France, of course, already has that very, very bloated balance sheet. We're talking about a budget deficit at 5.5%, which is really much more than what's allowed under European Union rules. But it's really about political risk, isn't it, Heidi?
It is. And it's interesting because we see risk assets likely to continue kind of shrugging it off. But as you say, it is the uncertainty, it is this tension that continues to grow between fiscal and monetary, which it's not just France, right? We see this going into elections in just an unprecedented year for the heaviness of how many elections we've had and continue to watch going into the second half of this year. And it'd be very interesting to see whether we will then see that reaction from the likes of the yen, which has been a bit of a shrug so far. But let's take a look at what we're tracking when it comes to some of these other markets, futures markets, that is going into the rest of this session, because a lot of that focus has been on Europe and just perhaps the inability to be able to form this government at this point. We are seeing US futures looking a little bit softer.
Yeah, after that 34th record high of 2024, right? But we continue to watch the election risk about President Biden. Of course, we have seen more congressional Democrats being a little bit worried about his ability to beat Donald Trump. And Heidi, as you said it, the dynamic between potentially more fiscal stimulus coming from the U.S. and what happens to Fed policy going forward, very, very important. But the China show is next. This is Bloomberg.